Our next guest agrees that Apple's upcoming earnings will be all about the iPhone 16 and whether its AI features can fuel a big upgrade cycle that could last beyond 2025. For more, let's bring in our friend Toni Sacconaghi, senior U.S. IT hardware analyst at Bernstein. Toni, welcome. Good to see you. It would seem to me, and I made this point earlier this week, that maybe the quarter we're going to hear about tonight and even the quarter that ends in September are kind of preludes or appetizer portions for the quarter that really matters, which will be the one in October when this new AI-enabled iPhone will hit the market. Am I right on that?
Good afternoon, Tyler. I think that was well said. So I think investors are looking forward. This has not been a good iPhone cycle. Whether Apple beats or misses a little bit this quarter on iPhone expectations doesn't really matter. We know it was not a strong cycle, and iPhone will likely be down for the full fiscal year. I think what's more important is just the anticipation of what will come with the next cycle. This is the first time Apple is reporting since they had their Worldwide Developers Conference and introduced Apple Intelligence. And investors will be holding their breath on every word about what kind of functionality Apple will ultimately bring and, potentially how big the cycle will be. I don't think we're going to learn a lot from guidance. Historically, the iPhone only ships about 7 days in September. And guidance is largely about Apple destocking old iPhones and restocking new iPhones. And historically, there's been no correlation with their guidance for next quarter and how strong the cycle is. So I think investors will be listening more about for qualitative things about what might be coming in terms of Apple Intelligence features going forward and when that cycle and how big can really kick in.
I don't know that it matters one way or another. The stock is the stock, and the stock has been doing pretty well in the most recent quarter. But right now, today, do you call Apple a growth stock or not?
I'd say Apple is a quality compounder. So we think Apple's normalized revenue growth rate is around 5%. We think margins are flat to up, and they buy back shares, so EPS over time can grow about 10% per year. I think one of the good things about Apple is it does have this huge installed base, 2 billion devices, about 1 billion unique customers. And so it does have a consumer-like characteristic, very high return on capital. So I would view it more as a quality compounder rather than an outright growth stock.
Interesting.
And I guess a lot of people, Tony, are saying, nope, it's time. This is broadly going to be called the AI sell-off, sell the Mag 7. It's the pivot into the Russell 2000 small caps. I mean, if that plays out and takes capital away from big cap tech, does it have long-term implications for their performance?
Well, Kelly, I think that's a great question. It's really the question du jour is there too much AI hype? And ultimately, can we see a pullback in all things AI related? Apple is a little bit different. So one of the concerns about the Mag 7 more broadly is just the tremendous amount of capital expenditure that's going into AI equipment and infrastructure. Apple's not really doing that. They're using third-party data centers. They're going to use OpenAI as a partner. And Apple's going to be a conduit to provide AI to its customer base. But that AI is going to be run externally, not on Apple servers, or not much of it on Apple servers. And so Apple is not stepping up its CapEx. So the fundamental concern is there's so much CapEx, is there going to be enough revenue? Apple doesn't really have that question surrounding it. I think its question is really, is the AI good enough to cause people to upgrade at a higher rate, and therefore revenues will go up over the next couple of years? Whereas more broadly, I think the question surrounding large cap and mega cap tech is we've made these huge investments in AI. Are we going to get a payback?
Right, exactly.